Welcome to episode 9 of the $500 to $10,000 trading challenge. As we can see over here on Solana, on Ethereum, and last but not least, our beautiful trade idea on Phantom is that the trading challenge is running extremely smooth. All three positions are still in massive profits over the weekend. While I was in Barcelona, Phantom also hit the second take profit target over here to the pip accuracy once again. Beautiful, beautiful price action. Now all three stops are resting in profit as well. Also the Ethereum stop loss has now been moved into profit, and as you guys can see is that the account is running in massive profits. The account is currently worth $828. Obviously there's around $145 unrealized P&L. We still have huge profits running on Phantom, Solana and Ethereum, especially on Solana. We have a big chunk that is unrealized, but I'm still letting these positions run until higher targets. I have targets set, I trust my analysis, the positions are already risk-free, so we cannot lose any money anymore. I think it's time to start looking for some new positions. We just found our newest long position. Over here you can see the actual trade signal, and over here you can see the chart for OP, in which we are once again trading in a beautiful range. Pivot number 1, pivot number 2, pivot number 3. And pivot number 4. We can see beautiful range behavior. Small deviation of the range high leads to an impulse to the range low. Deviation of the range low. Perfect retest of the range low leads to a test of the range high. And eventually we see a small deviation above the range high, followed by a bigger deviation above the range high. Then what we see over here are these fake break of structures. What are these fake break of structures doing? They're inducing people into opening up breakdown shorts over here or pullback shorts over here. Where do we think that they are placing their stops? Above the high of the deviation, which is also an all-time high for OP. But why are these fake break of structures? Because these are not the lows that brought us to this high over here compared to this high that brought us to this low. This is the low that brought us to this high, after this high brought us to this low, and this low brought us to a fresh high over here compared to this high. So this is the significant low to break in order to get a structural shift to the downside. So these are fake break of structures. Then more locally on the 4-hourly time frame, we can see that we are in a local downtrend to the downside, and that over here we are seeing a valid break of structure to the upside. So that means daily trend is up, 4-hour trend is up, 1-hour trend is up. We see deviations of the range low and the range high, and currently we can see that we are trading above the mid-range. So as long as we hold above the mid-range or see a small deviation beneath it and then a reclaim, then we should go for this range high liquidity pool over here. That is a valid liquidity pool because of these fake break of structures. So I'm anticipating a sweep of this local sell side liquidity that is being engineered by these local fake break of structures that are only visible on the 1-hourly time frame. Anticipating a pullback, sweeping that sell side, either bounce off the mid-range or start a deviation beneath the mid-range, fill our second and maybe even third entry point before hopefully a reversal to the upside towards the range high liquidity pool. I'm risking $35 or $30 in this position. I believe $35, $20 on the first position, $10 on the second position, and $5 on the third position. Let's see if our entries get hit. In the meantime, our other trades are still running very, very nice. We took 50% more profits on Solana, banking us another $50. So the account is running very, very well. Let's see if this position hopefully can get filled and if it will play out or not. As you guys can see on the screen right here, we just realized another $16 in profit on Ethereum. And if we get a pullback from here, I'm looking to add that risk back to the position at this single level over here. I'm looking for a second position on Ethereum. I'm looking for an add-on. I'm risking exactly $16 on that add-on. So if that add-on and the original position get stopped out, they both have the stop loss over here, then we lose $16, but I just realized $16 on the position as well. So basically then we still play break even. But if we do get filled on this add-on position, which is beautiful, beautiful confluence, because we have the top of this hour 4 breaker level over here inside of a bullish hour 4 fair value gap. We have all our 4 important EMAs aligning exactly with the entry points on the 1-hourly time frame, exact same setup. Hour 1 top of the breaker aligning with the hour 1 bullish fair value gap and hour 1 EMA confluence. So both on the hour 1 and hour 4 time frame, it is looking very, very pretty. Then on the lower time frame, we are seeing a potential, once again, fake break of structure that is engineering liquidity over here right above our entry area. So beautiful confluence is lining up for a potential, hopefully quick flush, hopefully quick fill for Ethereum, and then afterwards I'm targeting a brand new all-time high for Ethereum, and I will potentially hold these two positions all the way towards the new all-time high, but probably, as you guys know, I will shave some profits along the way. There's also a possibility that we are going to get stopped out. Let's see how this scenario plays out. Hopefully we made the right decision, and hopefully we can compound some profits along the way up.